The year is 2025, and the world is a tinderbox. We see a resurgence of old rivalries. We see new challenges rising on the horizon, and unfortunately, we see the ghosts of the past returning to haunt us. One such ghost is the specter of protectionism, rearing its head most prominently in the form of President Trump's trade war policy to make America great again. Trump's election to re-enter the Oval Office in January 2025 sent shockwaves through the global community. Almost all major global leaders except China's President Xi are scrambling to meet Trump in an effort to avoid an all-out trade war with the US, the largest economy in the world. Many world leaders hoped for a more moderate approach. What they got was a doubled-down commitment to the America First agenda that defined his first term. This time, the stakes are even higher. Trump's signature tariffs, once a point of contention, are back with a vengeance. These tariffs, essentially taxes on imported goods, are designed to protect domestic industries from foreign competition. However, history has shown us time and again that such measures often do more harm than good. Higher tariffs not only encourage inefficiencies on the part of domestic producers, but also cause higher cost of living. India, the tariff king of the world, is a prime example of the high cost of living. The world holds its breath. Will this trade war plunge us into a new era of economic uncertainty, or will cooler heads prevail? Trump's trade war is not a single battle but a series of targeted strikes against some of America's most vital trading partners. Canada, Mexico and China have found themselves in the crosshairs, facing a barrage of tariffs designed to reshape the global trade landscape in America's favor. Canada and Mexico, America's neighbors and partners in the North American Free Trade Agreement, are now on the receiving end of a 25% tariff on a wide range of goods. Even Canadian energy, a cornerstone of the US energy supply, faces a 10% tariff. Trump tariffs and retaliatory tariffs represent a significant blow to the integrated North American and global economy, threatening to disrupt supply chains and increase costs for businesses and consumers alike. The US CPI may surge around 1%, with an additional cost of living of around $2,000 per small household per year as a result of the Trump trade war. China, America's largest trading partner, has become the primary target of Trump's trade war. Tariffs on Chinese goods have been a constant threat, creating uncertainty and volatility in the global market. The current round of tariffs sees a 20% levy on a vast array of Chinese imports, escalating the trade tensions between the two economic giants. These tariffs are not mere bargaining chips. They are weapons wielded with the intention of inflicting economic pain and extracting concessions. The question remains, at what cost? The stock market, that fickle beast of speculation and sentiment, has greeted Trump's trade war with a mix of anxiety and apathy. Initial reactions were predictably negative, with the Dow Jones Industrial Average plummeting by 150 points as investors grappled with the uncertainty unleashed by the tariffs. Futures markets also slumped, reflecting the nervousness gripping global investors. However, in a move that surprised many, the markets rebounded, ending the day on a positive note. This sudden shift in sentiment comes after White House Press Secretary Caroline Leavitt confirmed at a press briefing that the Trump administration met with automotive industry leaders where possible auto tariff delays were discussed. Overall, Trump may blink on his trade war policy with Canada, Mexico and China, as it's causing Wall Street nervousness and Real Street unhappiness, as most ordinary Americans need cheaper imported day-to-day goods to survive. The US needs imported cheaper goods to maintain the Goldilocks nature of the economy and can't afford higher imported inflation. These companies, less reliant on traditional trade flows, seem to be weathering the storm better than others. However, the underlying uncertainty remains. How long can Wall Street shrug off the trade war's potential consequences? The markets are a roller coaster, and Trump's trade war has only added to the volatility. Buckle up, because this ride is far from over. While the stock market might be a fickle beast, the true cost of Trump's trade war is felt not on Wall Street, but on Main Street. Tariffs, despite being framed as a tool to protect American jobs and businesses, inevitably translate into higher prices for consumers. This hidden tax, passed down through every link in the supply chain, is already making its presence felt in the wallets of everyday Americans. Trump is trying to bluff the Americans by telling them these tariffs will be eventually paid by exporting nations like China, whereas the gospel truth is the US importing agencies are ordering these items from China, and those US importing agencies have to pay the required import duties or tariffs to the US custom agencies, treasuries, which may be eventually passed to the US consumers. In reality, Trump is trying to impose indirect taxes on Americans on one hand, while cutting direct taxes on the other hand. From groceries to gasoline, the price of everyday essentials is set to creeping upwards. The cost of imported goods, if burdened with tariffs, is bound to go up on store shelves across the country by the next few months if Trump's tariff is indeed effective from March to April 25th. Although as a trade war currency, higher USD may neutralize higher import duties to some extent, it's negligible and may not be sustainable in the longer run if the US continues to have a large trade deficit with its main trading partners. A simple trip to the supermarket becomes a stark reminder of the trade war's impact. That avocado toast you enjoy? Pricier. That new iPhone you've been saving up for? More expensive. Economists warn that this is just the tip of the iceberg. As tariffs bite and businesses adjust to the new reality of global trade, inflation is likely to rear its ugly head. The very real possibility of a wage price spiral, where rising prices lead to demands for higher wages, which in turn fuel further inflation, is a nightmare scenario for the Federal Reserve, set to cut rates 2 times this year. The trade war is a gamble, and it's a gamble that American consumers can ill afford to lose. Global trade on shaky ground, supply chain disruptions and uncertainty. The globalized economy is a complex web of interconnected supply chains, with goods and services flowing across borders in a delicate dance of production and consumption. Trump's trade war, with its barrage of tariffs and threats of further escalation, has thrown sand into the gears of this intricate machine, leading to disruptions, delays and uncertainty. Businesses, large and small, are grappling with the fallout. The imposition of tariffs has upended carefully calibrated supply chains, forcing companies to scramble for alternative suppliers, renegotiate contracts and adjust production schedules. The added costs and logistical headaches are squeezing profit margins and threatening to derail business plans. The automotive industry, heavily reliant on cross-border trade, offers a stark illustration of the disruption caused by the trade war. Honda, for example, has been forced to shift production of its popular Civic model from Mexico to Indiana in response to the tariffs. This move, while aimed at mitigating the impact of the tariffs, highlights the difficult choices businesses face in the current climate. The ripple effects of these disruptions are felt far and wide, from factory floors to store shelves. The smooth functioning of the global economy, once taken for granted, is now under threat. The uncertainty generated by the trade war is perhaps its most insidious effect, eroding business confidence and hindering investment. The world watches and waits, hoping for a swift resolution but bracing for further turbulence. Geopolitical tremors from Ukraine to Argentina. Trump's trade war is not just an economic policy, it's a geopolitical battering ram, wielded with seeming disregard for the delicate balance of international relations. The fallout from his trade policies is being felt on multiple fronts, exacerbating existing tensions and creating new ones. The ongoing conflict in Ukraine, a tragic testament to the fragility of peace in the 21st century, has become entangled in the trade war's web. Trump's decision to halt military aid to Ukraine, ostensibly over a personal feud with President Zelensky, has raised concerns about America's commitment to its allies and emboldened Russia's Putin. Meanwhile, Trump's pursuit of a free trade agreement with Argentina, a move seemingly aimed at undercutting Brazilian influence in the region, has further roiled the waters of South American geopolitics. This transactional approach to diplomacy, prioritizing short-term gains over long-term alliances, has left many world leaders questioning America's reliability as a partner. The trade war is more than just tariffs and trade deficits. It's a symptom of a deeper malaise in American foreign policy, one characterized by unpredictability, unilateralism, and a disregard for the norms of international cooperation. The world is watching, and it's not liking what it sees. Tax cuts, a band-aid on a bullet wound? As the trade war inflicts its economic pain, the Trump administration has reached for a familiar tool in its policy arsenal: tax cuts. The prospect of tax cuts, a cornerstone of Republican orthodoxy, is being dangled as a potential remedy for the economic headwinds generated by the trade war. In his SO2 speech, Trump also proposed an income tax deduction for Made in America car loan interest. But can tax cuts really offset the damage inflicted by protectionist policies? The proposed tax cuts, details of which remain vague, are expected to target both corporations and individuals, with the aim of boosting investment and consumer spending. However, economists remain skeptical about their effectiveness in mitigating the trade war's impact. Some argue that tax cuts, while politically palatable, are a case of too little, too late. They may provide a temporary sugar rush to the economy, but they do little to address the underlying structural issues exacerbated by the trade war. Moreover, the long-term consequences of tax cuts, particularly in the context of an already ballooning national debt, are a cause for concern. The trade war itself is already putting a strain on government finances, as tariff revenues fail to offset the costs of mitigating the economic fallout. Adding further tax cuts to the mix risks exacerbating the deficit and jeopardizing the long-term health of the US economy. Tax cuts might be a politically expedient bandage, but they are unlikely to heal the self-inflicted wound of the trade war. The art of the deal, or a recipe for disaster? Trump, the self-proclaimed master of the art of the deal, has staked his presidency on his ability to rewrite the rules of global trade in America's favor. His trade war, a high-stakes gamble with the global economy as the table, is his signature move, a demonstration of his willingness to upend the established order and play hardball on the world stage. But is this aggressive approach truly in America's best interests, or is it a recipe for disaster? Proponents of Trump's trade policies argue that his tough tactics are necessary to address long-standing trade imbalances and protect American jobs and industries from unfair competition. They point to the perceived threat posed by China's economic rise and the need to rebalance the scales of global trade. However, critics argue that Trump's approach is counterproductive, damaging the very industries it purports to protect and alienating allies while emboldening adversaries. The reality is that trade wars are complex and unpredictable, with far-reaching consequences that extend beyond the balance sheets of corporations and the pronouncements of politicians. The global economy, intricately interconnected and reliant on the free flow of goods and services, is not a zero-sum game. Attempts to rewrite the rules in favor of one nation at the expense of others risk unleashing unintended consequences that could harm everyone. The art of the deal, it seems, is a dangerous game when played on the global stage. The trade war legacy, a world of uncertainty. As the trade war rumbles on, its ultimate legacy remains uncertain. Will it usher in a new era of American economic dominance as its proponents claim short-term pain for long-term gain? Or will it leave a trail of economic wreckage and geopolitical instability in its wake? Only time will tell, but one thing is clear: the world is watching and the stakes are high. The immediate impact of the trade war is undeniable. Global growth is slowing, businesses are struggling to adapt to the uncertainty, and consumers are facing higher prices for everyday goods. The interconnected nature of the global economy means that no nation is immune from the fallout. Whether the trade war escalates further or a fragile truce is reached, the scars are likely to remain. The long-term consequences are more difficult to predict, but the potential for lasting damage is real. The trade war has strained alliances, eroded trust in the global trading system, and fueled nationalist sentiment around the world. It has also created a climate of uncertainty that is stifling investment and hindering innovation. The world is at a crossroads. We can choose the path of cooperation and shared prosperity, or we can continue down the road of protectionism and conflict. The choice is ours, but we must choose wisely, for the stakes have never been higher. Economists predict a 0.2% reduction in US GDP and the loss of 142,000 jobs from existing Trump-Biden tariffs alone, with further escalation likely to amplify these effects. China is far ahead of the US in terms of industrial and infra ecosystems. Thus, Trump can't compete with Chinese manufacturing global supremacy by simply imposing tariffs and encouraging domestic inefficiencies. Trump has to invest much more in fragile US infra to compete with mighty China and make America great again.